I'm Charlotte McLeod with investingnews.com, and here today with me is David Morgan, publisher of the Morgan Report. Thank you so much for being here. Great to have you.
Charlotte, it's always fun. Thank you.
Really good to be speaking with you. I feel like I'm saying this to a lot of people right now, but it seems like the perfect time to have you on because there's so much going on in precious metals. And where I thought we could begin is with silver. So we've had silver on the move in recent weeks, approaching that $50 level. And what I wanted to ask you is how much of that increase you think is related to silver specific factors and how much might be related to maybe playing some catch up with gold?
Well, I think it's both. I mean, in these major moves, you'll see, they actually go back and forth. In other words, there are times where silver leads, but when you see the big breakouts, it's gold and then silver. And if we go back to the beginning of this bull market, it happened in the year 2000 for gold. I forget what month. I haven't looked it up, but it was in the year 2000. Silver actually did not break out until it got above the 555 level, which was September of 2003. So let's just say that gold broke out in September 2000. I think it was early in the year, but so September 2000. So 3 years later, silver actually breaks out. That's a pretty big lag. And then once silver broke out for that 11-year bull market that you and I both enjoyed, excuse me, and we both enjoyed that. Basically gold was year over year higher every year for 11 years. Silver outperformed gold in some of those years. There were years it was off. But it was a huge bull market for everybody. And then it got real frothy near the end. It started to go parabolic. And as you know, I call it the top. It's interesting, I have to digress. There was a podcast friend of mine, two of them, and he was talking about how hard it is to call top. And it is. I'll call it luck. But he didn't mention me. Usually he does. But anyway, I don't get my feelings hurt too much. The point is, we have a lot of things to go forward. So the second part of your question is is it different this time? Yes and no. Yes, it's different because the breakdown throughout the financial system is occurring worldwide. More and more people are recognizing it. And we're seeing sector rotation, which means the big money is moving into gold. It has been for years, as I've said to you and many others. The run to gold began when the central banks started to increase their allocations to gold. Silver has caught it. It's starting to do what it did in September 20 of 2003. It's made a breakout in this, what I think, last leg up. And this last leg up should be the most effective in capital appreciation, and duration-wise probably won't last that long relative to the totality of the bull market. So if you start it from 2000 till now, it's 24 years long. If you start it from whatever, the bottom, which I remember the month and year, it's still been many years since we hit the, 1,050 or whatever it was for gold. We're now up at almost 4,000. So I think I over-answered that, Charlotte, but I am still bullish, but all bull markets function is to shake off as many participants as it can. And we haven't seen one of those big shake-offs yet. I do expect we could have one in October.
I think that was a good starting point for us, and it opens up a lot of directions that I was hoping to go in. And one of them was if you could help us situate where we are in the cycle when it comes to silver, because I do hear quite often that silver lags behind gold, then it outperforms. And if you see silver starting to outperform, maybe that means you're getting to the end of the precious metals bull market. But it doesn't really feel like we're at the end right now. So anything you would add on that note?
Yeah, well, first of all, you nailed it. One of the best clues to say that you're at the top is not only a parabolic move, but silver starting to outperform. It really isn't. And we know that from the gold-silver ratio. A lot of people, make light of it, but it's a useful tool if you know what to use it for. Excuse me. And what you use it for is to see if silver is outpacing gold or not. We're still in the 80s for the gold-silver ratio, which is historically high. And until we get to 70, I'm not going to be particularly happy. And off of today's gold price, a 71 ratio would be like $55 gold. $55 silver. And that would be over that 50 mark, which we're all hesitant about. And I'm writing about that in this month's newsletter. People see the 50 mark differently. All the technical types talk about, a double cup and handle, or a cup and handle that's, 50 years in the making. It's a very significant number psychologically. Silver's never gotten over 50 and really stayed there, and it hasn't in 50 years. So I think it could be a crossing the Rubicon moment, which means once it's accomplished, and I believe it will be, we've established something that hasn't occurred for 50 years in a precious metal known as silver. And that will have, I think, some psychological effects to the silver community. And for the algorithms, it will also have an effect because there'll be blue sky. In other words, everyone that's ever held silver nominally is at a profit in inflation-adjusted terms, far from it for many people that bought it, even in the 30s or whatever, inflation-adjusted, they really haven't made any real significant gains. So I'm not anxious for it to happen. And the last thing is, in the previous moves into the 40s, silver really didn't stay there for very long. And now we are seeing like a monthly close in the 40s. And I'm actually happy to see us trade between, let's say we just consolidate here between, make up a couple numbers, 47 and 44. And we stay there till the end of the year. A lot of people say, see, silver can't go any higher. I would say, no, we're building another base to go higher with more authority than if we just bounced up there in the next couple of weeks. What scares me, being a futures trader in my past, is that you get a move and it just keeps going up and up, and then you don't have any kind of a base or any kind of support. So far, silver's making enough support as well as gold that these are strong markets that continue. And last thing is, somewhere there'll be a shake-off. I believe it will be short-lived, but significant enough to scare out new people or weak hands or people that are unsure of the commitment to, the silver and gold markets.
And did you mention that's something that could potentially happen this month in October? I
think so. I wrote about, and I don't usually take other analysts I do take other analysts into account, but I always try to be my work and, serve me well, because you can be influenced by others, and you should be. I mean, I've learned from many, many people in the resource sector over decades, but I still try to remain independent thinking. Having said all that, Charles Netter, who I think is one of the best timing-wise, he's looking for something in October. I wrote about that a few months back to my premium members. And I agree that October is, seasonality-wise, one of the more risky months in the stock market. And the way things are going with this government shutdown, the wars aren't getting better. It looks like, Trump switched his mind on Ukraine. And on it goes with all the stresses we have as human beings on a planet that just wants peace. We are seeing all those things occur, and the market is overvalued by any metric you want to use, and has been that way for a very long time. The margins are up to about $1 trillion, and these are mostly less sophisticated investors. The big money boys have bailed out of the market, Warren Buffett being a leading example. Some of the Amazon characters and a lot like that are out. So if the big money's exiting, then who gets left holding the bag if there is a correction? And I'll put my neck out and I'll blame Charles Netter. I won't, Charles. But I will state, I've told everybody that's not sure what they want to do with their portfolio to stand on the sidelines for this month, for all of October, and let's reevaluate. Now, if something happens big in October, it's my duty to my members to let them know, okay, this is it. We hit this and blah, 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 and make a commentary, but I won't do a hypothetical any further. It's caution, I think, is needed at this time across the board. Metals, but particularly the stock market, and even the debt markets. I mean, this quantitative tightening is not really doing what the government would like it to do. And a lot of people are not doing well because of the insidious inflation that's much greater than the government says.
Yeah, that's certainly true. And looking a little bit more closely at the idea of silver over 50, is there anything further you'd say about the psychological impact there? Because that's something I find very interesting. You mentioned, of course, it's a level that we haven't seen often, and it's only been brief when we've gotten there in the past. There's a lot of people who are invested in this market heavily, and they've got kind of that, I guess, psychological attachment there to it as well. So any further thoughts?
Yeah, there are. It'll be like a bell curve. We're all familiar with the bell curve and what we call the tail ends, which are extremely unlikely. So you'll see both the tails and you'll see the middle as well. I usually stay in the golden mean, as Aristotle called it. But you'll see people say, now we've reached 50, we're going to 1,000 or we're going to 200. Or, you'll see that extreme, the tail end of the bell curve. And then you'll see people like, it's only a matter of time. It's only been 2 weeks and silver's going to crash down below 50 because it can't maintain that high level. It never has and it never will. This is an anomaly. So you see those two tail ends of the curve. So it's 50, it's an anomaly, it's coming right down, and those is going to the moon. So where is it in between? And that's, kind of my job to try to help as many people as I can that, what is a likely scenario and what is the top price, and no one can pick that ahead of time. But I do think with that, the psychology will be favorable to silver. So what right now is taking place is, the analogy of Lucy and Charlie in the football. He comes to kick the football and she pulls it away from him. And she does it again and again and again. And silver investors have seen that so many times that once silver got above 35, 38, they said, the football's coming away, I'm getting out, selling at 40. Oh, 44, I'm happy to take that. 47, even better. So a lot of people are actually selling back into the silver market. And in my view, they should hold on, but they can do whatever they feel is best. Some are just selling partial because they need the cash or whatever. But once we get to that new level, what's the middle between it can't get above 50 and it's going to the moon? Well, it's going halfway. So there'll be a lot less resistance. You'll see algorithms come in and start trading silver, and you'll probably see institutions come in because they know that it's a small market and they can move the market with a buy order if it's significant enough, and just think that someone else will come in with as large or larger buy order and they can trade out of it. In other words, buy it at 55 and sell it at 62 and watch it go to 70 or whatever. So it's going to be tough. I hope it doesn't get into that kind of a market, but I think it's more likely that it will than not, because so much of the trading in the general equity market is done by algorithms, computer trading, computers against each other, getting the millisecond advance, being able to see a small spread that we can't see with a microscope, play that spread, millions of times and come out with a big profit. So I really don't like the way things have gone technology-wise on the trading aspect of things, but I have no control over that. So all I can do, Charlotte, is, what I do best, and is try to take a calm, reasoned approach to what is reasonable and let my expectations be non-existent. Don't expect one way or the other, but just watch the market. Let it feed me the best information.
Yeah, that measured approach. And, you're mentioning the possibility of institutions, large buyers starting to come into silver. Who do you see buying right now? Who's picking up silver at the moment? Because I remember back in March when we talked, I was asking you, are we going to see another silver squeeze? And you'd mentioned that the retail crowd wasn't in the market at that time, and you'd need that if that was going to happen. So who is buying right now?
Well, country-wise, it's China and India. And, specifically, I think it's looking at it as maybe strategic, what we need for, building out more high-tech facilities and more solar panels and more things along that line. And I think India is oriented more toward the investment side with, having these ETFs that they have in India now, and the population being geared toward gold and silver. And then we've got, the Saudis have bought almost 1 million shares of the SLV. So they've got a big enough stake that they could actually ask for delivery of silver. And I think that's catching on. Of course, Russia bought silver and platinum not all that long ago. Some people know that. Some people may have forgotten it. So I think you're seeing silver start to come into the institutional side for both investment and for industrial purposes. And that's what I've always thought was the bonus for owning silver, is we could, not would, but could get into a situation where Tesla needs it for pushing things out of the factory, and XYZ pension fund needs it to hedge their position. They know silver's got, blue sky, it's at 55 and it's only going higher. So and I think when you have those two factions moving into silver for different reasons, the public will come back into the market. It's just one of those, FOMOs, fear of missing out. And oh my goodness, I thought silver would never get above 50, but so-and-so says it's going to 1,000. So therefore buying it at 70 is great. And then it goes to, 85. And that person thinks, wow, I'm so glad I got it at 70. Now it's at 85. But those kind of moves, depending on how quickly they happen, can be short-lived. Again, I don't think we're going to see that. I think we've got a year or two ahead of us, and some people think 10 years. Fundamentally, I would say we probably got 10 years based upon the dynamics of the silver market with these continuous shortfalls we've seen for 4 years or so. The problem with that is, in my thinking, not saying anyone's right or wrong, is I see a complete shift in the structure of the financial system before a 10-year time frame, where we're put into a system of maybe digital currencies, with maybe even a cashless society, maybe even looking at programmable money, which we have, and looking at probably more oversight by the authority figures on our daily lives. That's one of my grave concerns, as you know, having spoken with me several times. So, yeah, fundamentally 10 years, okay, I'll give you that, but I don't think you can get that linear projection that we're going to go. We have a big anomaly coming up in the financial system. It's apparent to almost everyone at this point in time, and I don't think it can go muddling along as we have been for so many years, kicking the can down the road. I think we hit the end of the road, and we're in for a shift.
Yeah, well, I think it becomes very difficult to make predictions about, okay, where is gold going to go? Where is silver going to go if you have something that huge coming down the line? So anything further you would add there? Because it does seem like it becomes hard to see what's going to be coming.
Yeah, I just got one of our members asked me, they're allowed to ask me 2 questions a month, and many of them do, and it's fine. I enjoy what I do. So he asked me about, what was the question? Congratulations on being proven right. It was a long, hard fight, but finally you are vindicated for all you've done for years of hard work. You're a North Star of a long journey, always thoughtful, informative, blah, 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 blah. I won't keep reading in the kind words you sent me. His question was, I'm one of them, by the way. My question would be, how do you know, what evidence do you see for sector rotation and an indication and stability of price appreciation trend? And when, for everybody, there's a seller, but I'm bullish. Give me some advice on, determining like the high and what's going to take place for flows. So when money moves between sectors, as it is, that has a lasting impact. So you want to look at the ETF flows like the GDX, GDXJ, SIL, and SILJ. At the same time, more important than almost anything is trading volume at the stock level. When mid-tier and smaller producers suddenly trade 3, 4, 5 times their normal daily volume and prices are rising, that isn't random. That's retail money coming back into the market and fund buying and probably institutions. One more layer of confirmation is relative to performance. When the mining sector starts to outperform the S&P 500, it has, the NASDAQ, which it has, it's a telltale sign that the generalist money, not just the hard money crowd, is beginning to rotate in. And it is. It's also essential to understand the sequence of the rotation. Early on, you'll often see juniors pop first because they're thinly traded, sensitive to any buying pressure whatsoever. Next, the mid-tier producers will catch the attention of institutions as they scale in. And finally, the senior producers and royalty companies move, often pulling in broader investment community like institutions. As far as volume itself, yes, every buyer has a seller. The distinction is what's in change for the transaction. Rising prices on surging volume tell you buyers are hitting the ask. That's urgent. They're bullish. They're increasing prices on light or declining volume, suggest a thin or short-lived market. So as long as we've got enough participation that keeps increasing, and it is. So in short, if you want to track the health and stability of the uptrend, keep your eyes on three things: ETF flows, broad volume across the miners, and relative strength versus the general market. So wanted to get that in there, Charlotte. I try to be objective on this stuff and not get too giddy. It was nice what that guy wrote me. I didn't mean to read it all. I forgot. We wrote so much before the question.
I think that's really helpful. So these are some signs we can look for when we're wondering, are we getting to the top? And I remember you've told the story before of silver in 2011 getting up to these high levels and how you could see then, all right, it's time to get out, and you're telling people this. So these are signs that you also saw back then when we were in that silver situation.
Yeah, it was mostly sentiment. I mean, I did it for a number of reasons. One, being a futures trader, I know what parabolic moves look like, and I know you want to sell them the strength. You don't need that last tick, that last penny. That's an amateur's idea. And then I also saw the volume of new subscribers, and that was like the last data point I needed. I mean, when I was normally getting, 2 a week or whatever it was, I started getting 2 or 3 a day. I said, oh boy, this is it. And I made my call. And a lot of the crowd, not a lot, but some of the crowd said, David, you've lost your reputation. You're going down the history books as, the anti-silver guru. You don't know what you're doing. You're going to have to retract it. Retract it now, blah, 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 blah. And of course, it turned out to be correct. And I'm not saying I'm going to get the next one. I'm not saying that at all. What I am saying is that when you get in a very heated bull market, there's a propensity for people to think it could go on forever, and no market goes to the moon. So, but I still think we're so undervalued relative to gold, relative to the stock market. And we have these dynamics. I know I'm repeating myself slightly, but they need to be emphasized. If we get institutions and industrial users vying for the same stockpile of silver, and the public comes back in, we have some price appreciation ahead of us.
Yeah, I do think it bears repeating as well. And I do want to touch on gold at least a little bit. We've spoken about it a little bit here already, but I've been thinking, so I'm sure I've heard this from you. I've heard it from many people about gold in terms of the price. When you get to these high levels, maybe you should be careful what you wish for, because something is probably going wrong in the world if you see record high gold prices and silver on the move as well. So you've spoken about this already a little bit, but what are gold and silver telling us right now about what's happening?
Yeah, they're telling us, I use this, and I think I picked it up from Jim Dines. I'll give him credit. I think that's where I read it the first time. But gold is a barometer, not a thermometer. Everyone's like the daily price, and, they're very fascinated with it. But when gold's moving like this, a barometer tells you there's a big storm ahead. And that's what gold and silver, to some degree, are telling us, that the financial system is in trouble. And we gold bugs have known that for a long time. People that study the Austrian school have known that for a long time. It's just the barometer doesn't tell you what day the storm is coming, but it tells you the storm is coming. So that's what it's saying. And as I said earlier, what I have lectured on and studied and written about happens to be the new monetary system. And I did that at the New Orleans Gold Show last Thanksgiving, November of last year. And basically the whole lecture was based upon the Bankers Bank, the BIS, Bank of International Settlements, and how they structured all banks, reporting through them to them on how the new system will work. And so to me, being very freedom-minded, more above and beyond anything, is that it doesn't bode well for the average person as far as the amount of control they want over us in the financial system. And so I think that's the biggest picture. So is gold telling us That's in our future. That's what they're planning. Be prepared. There's a few ways out, or at least a way to mitigate it. And that's with honest money for honest people outside the system. And really, when you're talking money, there's only two that serve as money that are outside of the system, and that's gold and silver. I mean, Bitcoin or any of the cryptos, although you might think they're out of the system and have on a cold wallet and all that, they have to go to an exchange. And what are you going to get for them? US dollars? I'm in gold because I don't want US dollars.
Really, really good information. And I had a chance to see that presentation last year. It was very valuable. I think that people in our audience, and maybe people who are new to the sector, are looking at this right now, and they see these concerns. They're becoming more aware of what's happening if they don't know already. And they wonder, okay, so how do I set myself up? How much gold and silver do I need to have? What else do I need to have? And I know every person is different, but are there any words that you could share to direct people a little bit?
Yeah, thank you for that. I think number one is, more self-responsibility. Realize that a lot of what happens to you in life doesn't happen to you in life. It happens as a result of your choices. I've got two girls and they make good choices most of the time, but not always. And when they made bad choices, they usually had to pay a price. So that's one, I think, taking self-responsibility. And what that means is live within your means if you can. And that's what's so upsetting to me, is that there are people out there, and it's a lot of single women. There's guys too, families, couples have been together for years, but they're, two jobs and they can't make ends meet. That's sad, but that's reality. So if you can't live within your means, you can't. I get it. If you can, then you want to really save in some precious metals, or, get extra, whatever, food even. But I think the point I want to make is to stay calm and realize that, Matty's been through these things before, we come out of them. It's just that if you catch the gold bug, don't bite real hard. You don't need a lot to weather a storm. You don't, like when the barometer says, hey, storm conditions ahead, I'm going back in the harbor. Go back in the harbor and go about your life. Maybe make a few changes, but you don't have to radically sell all your stocks and put it all in gold, for example. That would just not be a prudent move. You don't want to be scared in a position. You want to do it from let's say, a centered position where you're calm and, okay, so what do I need? Well, Jim Rickards, myself, many have said somewhere around the 10% level is probably enough for almost any situation. Well, that's not a lot. You got 90% wherever it's at, real estate, stocks, wherever. And so don't overdo it. And now with the market being so heated, how do you do it? And I think going back to the 10 rules of silver investing is take a longer term approach and buy in, over several months. So dollar cost average, it's called. And that really helps take a lot of emotion out of it. Okay, I want a 10%, that's X. I'm going to get there in increments of 1/10 X. I'm going to buy 10% of that every month for the next 10 months. And if you're still in a bull market, even with the ups and downs and the shakeouts, you will come out with a good average price, and you'll be able to be protected and sleep well at night. I want to give a presentation that keeps people calmer and more relaxed rather than the stress, again, that we're all under with our political classes. Seemingly, my opinion, not yours, and it's your show, but you let us speak our free mind, but the political class is not doing their jobs and actually being at the detriment, in my opinion, to a lot of us citizens.
Yeah, I appreciate that, because there is a lot of stress in life right now. And it's good to bring it back to breaking down those steps and telling people, okay, you can do this, and this is how you can make it happen. So definitely happy to go into that with you. And before I let you go, I want to bring up platinum as well, another of the precious metals. The price of platinum, I know you've been sending some tweets out about platinum. It's been on the move as well. And it kind of reminds me of silver with the ongoing deficit situation and now the price on the move. So I imagine you're bullish on platinum, but curious to get your thoughts on the outlook there.
Yeah, we're writing about that in the report. It's going to be published in about 3 days. And we were early on platinum. And I made a more or less formal recommendation in the April newsletter when it was still around 1,000. and it's done well. I suggested that report. Gold was right near 3,500. And I said, I think gold's going sideways all summer. I think I told you this last time. I do more than one interview, as you know. Anyway, and I was correct. And I said, if you're wanting to buy more, adding to position, look at platinum and silver. I wouldn't buy gold at this level. And that proved to be pretty good. I think one of my colleagues or associates, whatever you want to call him, Bob Moriarty, 321 Gold, he's been big on platinum. We were early. We still like it, but it's moved more than the other metals this year. And I think it's still undervalued, but like silver and gold, we want to be a little bit cautious here, especially like I said earlier. We might want to wait for the whole month of November and see what the general market does, especially with the setup. As I said, government shutdown and war problems, etc. So I love it. It's 15 times rarer than gold. It's a very small market. 70% comes from South Africa. If there's any disruption there, it would probably cause the metal to go higher. It's been in a structural deficit, and they're mining it at about $1,250. So they're just making a profit now, but I would say barely, but not significantly. Look at gold. Most gold miners, the tops are around 2,000, and they're almost double that. So the margin's almost 100%, whereas platinum, $200 on $1,500 price. It's a margin, but it's not anything close to the margin on gold. So I still think I favor platinum over gold at this point in time, but it's a small market, very sophisticated market. You pay a price going in. The spreads are big. So you pay a big premium on the buy side, and you usually get shorted on the sell side where you have to sell at a slight discount. I know that. I've accepted that. I understand that. But some people don't, and they get a little upset. And that's, that's part of the game, or part of the way it is. It's just a very, very thin market, and there's not a lot of demand for platinum on the investment side. But relative to gold, it's still cheap. And last comment, the Chinese are buying more silver jewelry than they have in a long time. The Japanese are buying more platinum jewelry than they have in a long time. And as these markets continue higher, new people will be coming in and thinking through, well, which one do I buy? And I think that will push the other white metals higher.
Well, definitely a lot of points for everybody to be thinking about. And before I let you go, I wanted to ask if you had any final thoughts you wanted to share, maybe about where to find you. I know last time we also spoke about the progress on the Silver Sunrise documentary. So I don't know if you have a progress update there as well.
I do. It's done. I'm going to launch it on the 22nd of October. Probably launch it to my members first as a courtesy for people that have, supported me for all this time. But it'll be free. And once I do probably a members only launch, I'll go ahead and launch it to the public, and it'll be free. And I get a lot of feedback, and I'm sure there's things that could be better, but you can just tweak it so many times. It's never going to be perfect, and someone's going to see it as great. Someone's going to see it as a waste of time. And, it'll be the tail end of the curve I talked about before, but the vast majority, I think, will get what I want, and that's to make them think about money, how it controls and stresses them out, how they don't have to buy into that narrative, how we ourselves are really the most important thing, our humanity, our interaction with each other, all that we've built. The elite really, the banking elite particularly don't really create much of anything except paper money or a digital keyboard. It's the entrepreneurial spirit. It's the spirit of people that really bring things to the fore. And I think we just have to kind of revivify that for everyone, that no matter who you are, where you are on the scale, it's not a scale that matters. It's how you approach your life and your fellow people, your community, which really has meaning in life. And I'm trying to alleviate the fear and stress of money for people. I can't do it with a film, but I can plant that seed or that idea with it.
Yeah, you can get that message across. Well, October 22nd, we'll look forward to that. I'll leave a link in the video description so people can bookmark it, and hope to have you back once it's out to discuss.
Great. Thank you, Charlotte.
Of course. Well, once again, I'm Charlotte McLeod with investingnews.com, and this is David Morgan with the Morgan Report.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.